Hello traders, the title of this video is Australian dollar trader shares his FS trading analysis in 2017. Alright, so this is our first video talking about the Australian dollar, US dollar currency pair technical analysis in 2017. This is an essential FS trading video for traders that are trading the Australian dollar, US dollar currency pair. All right, let's get started. Now, I'm now on the yearly chart, very important year, because in January, all right, after the month of January is closed, all right, it's very important for traders to go to the yearly chart, whether you are trading currencies, stocks, futures, indices, or anything else. February is a very important year for traders and investors. Month of January is closed. We go to the yearly chart and we examine the yearly chart. Okay, very important. Otherwise, you will start trading like a crazy trader, which is not good. So on the yearly chart, we can see that the price was in a declining channel, but as the price was coming near the zone where my cursor is, the bearish momentum was evaporating, so to speak, was dissipating, so to speak. You can see that my software is behaving a bit funny. You can see that this candle is moving as I'm moving my cursor. I don't know why. So you can see that this candle here, this one here, the price, it closed below, okay, the opening price. Though the candle, you can see I'm using green, but those are bearish candlestick bar. This one here, those are bearish candlestick bar. The white one are bullish, okay? So it closed below the opening price. So people will say, oh, it's bearish. But no, it's bearish, theoretically speaking, it's bearish. But if you look at the structure of this candlestick bar, you see that it went also up all the way here before people sold it. But as they sold it, it didn't close too far away from the opening price, okay? So it's not completely bearish, this candlestick bar, okay? Now, the year 2017, okay, has begun with a bullish candlestick bar, okay? So this candlestick bar will be closed at the end of 2017, yes or no? All right, so at the end of 2017, we will have what we call, okay, if you accept that, a doji, all right, and a bullish candlestick bar that will form what we call a bullish candlestick pattern. Now, a bullish candlestick pattern is a technical analysis. If the fundamentals are weak, the price will continue to go down, all right? So, bullish candlestick pattern does not mean buy by all means. It means that combine the technical analysis with the fundamentals, all right? So the reason why I'm pointing this out now is because a lot of traders that are using the candlestick patterns will be anticipating, okay, a bullish progression, because they will say, all right, we have a doji now, all right, and this candlestick bar is now bullish in 2017. The Australian dollar has a high chance to continue to go up, so they will be buying, all right. But one more thing. As we are on the yearly chart, I want to clarify this, so stay with me, please. The price is also coming out of the bearish channel. So we are talking about market pattern, declining channel, horizontal channel. So here we have market pattern, horizontal channel. The market pattern will determine the appropriate trading strategies that we should deploy. So when we are talking about market pattern, we can look at the market pattern in the short-term trend, in the medium-term trend, and also in the long-term trend, okay? So looking on this chart is bearish for the Australian dollar, US dollar, but now it's coming out, indicating to us that possibility that the price may continue to go up, but we will see, okay? So this is what we can see on the yearly chart. Very important. There are other key levels here. I will come back to them very shortly as we start moving forward, all right? So very important. So another thing, you can see that there is a support here on the yearly chart. You can see this zone here, in the zone of 7126. It's a very important support level. You see those candlestick bar here, all right? 7126. to 6, very important support level. Exactly the same level, the price is changing direction, forming a kind of a double bottom chart pattern. All right, on the monthly chart. Anytime you see a double bottom, and now on the yearly chart, we're on the yearly chart. Anytime you see a double bottom chart pattern, on the monthly chart, quarterly chart, yearly chart, those are usually high probability trading setup. One must use a top-down trading method to trade it without ignoring the Federal Reserve and the policymakers and economy news, which can change the dynamics of the technical analysis. All right. So this is what we see on the yearly chart. Let's go to the monthly chart to go a little bit deeper. So on the monthly chart, very, very important, all right, you want to ask the first question, all right, what is the current market pattern on the monthly chart? All right, so a lot of traders will say it's bearish. So you see bearish channel that we are seeing on the yearly chart, you see here, okay? But apart from that bearish channel, there is another market pattern that's being formed within that bearish channel, because we have, so the price acknowledging a key support level. Which one? 7126. You see on the yearly chart, very important key level, 7126. As we reach that level, the price now forming another market pattern. It's a consolidation between 7780 and 7126. You don't want to forget that. If you miss the market pattern on the monthly chart, you'll be fighting against the hedge funds and the big financial institutions. You don't want to do that. So price consolidating between 7780 and 7126. So as I explained to you before, the market pattern will determine the appropriate strategy that we should deploy. So what is happening now? As you can see, in January, the price was on the lower part of the consolidation. Professional traders deployed the appropriate strategy. They bought it for at the lower part of the consolidation. Now we are approaching the upper side of the consolidation. Now, as the price approaching 7780, they will be prepared to take some profit. You can see this candle here is getting a little bit smaller. It's finding it difficult to run fast as this one did. All right. So there's a resistance here. So there will be orders placed around 7780 to buy it. But do not forget what we have seen on the yearly chart. On the yearly chart, we have a doji and a bullish candle still developing. Candlestick pattern trader will be expecting this year to be bullish for the Australian dollar. So Australian dollar, so anything starting with Australian dollar CHF, all right? Australian dollar Swiss franc, Australian dollar US dollar, okay? Australian dollar Canadian dollar. Any currency pair that is starting with the Australian dollar, the market will be expecting it to be bullish this year. So far, so good. Don't forget that fundamentals will count. Economy news will count. So, all I will say to traders now, if you want to be truly bullish, wait until it goes above 7780. Okay, very important level, because there is a consolidation here between 7126 and 7780. The media line is somewhere near 7430. Okay, that's where the media line is. All right, so that's what we see on the monthly chart. We are coming out of the bearish channel, but we have another market pattern, a consolidation. Very, very important. And that will determine our trading, day trading, swing trading strategy. Where we are now, this is good. So the market will prefer to push it a little bit near that level. So we will see how that, whether they can reach it, that will be good. They can pierce through it, that will be good. All right. If we go to the weekly chart, there is something very interesting I want to show you here. Can you see it? Look at this session. Look at this session here. Try to look at the chart, the price structure, and let me know whether you see something very interesting. Can you see it? Okay, there is something here. We have this double bottom here. You can see here. The double bottom chart pattern usually is formed near key level. You see here, this level, 7126. So anytime you see a double bottom chart pattern on any time frame, ask yourself, is it formed near a very important key level, influential key level? high impact economy key level. All right. Okay. So here we are. So there's this double bottom chart pattern, followed by a higher double bottom chart pattern. Now here, this is a high probability trading setup. When you have a double bottom chart pattern followed by a higher low, in fact here there was a high probability trading setup, a double bottom chart pattern, that's we talk about TSTW24 traders, we talk about it in one of our video, a double bottom chart pattern followed by a higher low. That higher low is also at a key level, 7126, this is a high probability trading setup. Now, if you have a double bottom chart pattern followed by another higher double bottom chart pattern, you have again a high probability trading setup. So here we have a high probability trading setup, and again here we have a high probability double bottom chart pattern. Well, you need to remember those things, okay, and be able to spot them quickly. All right, you get it now? So that's what we see on the weekly chart. So far, so good. Technically speaking, it's looking bullish. But as I said to you, it's looking bullish. All right. For this double bottom chart pattern to become truly bullish, the prime must break above what? Have you been following us for some time, or are you new to us? If you are new, subscribe today. All right. For this double bottom chart pattern to become truly bullish, it must break above the nut. This is the nut here. This level here, or 7780 double bottom chart pattern. This is what I like to call the nuts. So we have a double bottom, they break above this nut here. This is the nut for this double bottom here. All right. Now we have a new double bottom chart pattern. For this one to become truly bullish, it must break above 7780. You see what's happening now? All right. So we have our consolidation in place, 7126 and 7780, but within that consolidation, we are seeing a bullish pattern being developing. And that's why I say to you, if you want to be truly bullish, allow it to go above 7780, breaks above, okay, run away from the 7780, pull back from a higher low, and then we take it from there, one step at a time. Remember that it will not go up if the fundamentals are weak. Another thing I don't want to forget to tell you today is that if you are trading any currency pair that is starting with the Australian dollar, or in fact, if you are trading the Australian dollar, you are trading gold, because they have a lot of gold, the Australian, all right? Are you Australian? Well, let me know in the comment section. We have a lot of Australian TST traders. So if gold is bullish, so the intention this year, people are buying gold because they think that the market, the Dow Jones, the S&P 500, the NASDAQ 100, are all in the fifth area where that the market has stopped. But the market sentiment is still bullish. We are likely to see a triangle for major, okay, stock indices. So there is a lot of hedge funds out there that are buying gold to hedge their, okay, trading positions. So if people are buying more gold, if gold is becoming bullish, all right, the Australian dollar will benefit from it. Therefore, the Australian dollar, US dollar will go up. The euro Australian dollar, if gold is going up, the euro will be weakening against the Australian dollar. Am I making sense? All right, so that's where we are now. But if you forget anything else, remember that there is a current market pattern, consolidation, okay, 7126, very important key level, and 7780. Apart from those key levels, I want to wrap it now very fast so you do not, okay, we do not waste too much time. The first long-term equilibrium price level for the Australian dollar, US dollar, is at 7468. That's the orange line here. 7468 is a key level, is what I like to call a very influential key level. You do not want to forget that level, 7468. All right, there are some work going on around my area here. So if you can hear the background noise, my apologies for that, okay? So first long-term equilibrium price level for the Australian dollar, US dollar is at 7468. Please do not forget that level throughout 2017. All right? However, the current short-term equilibrium price level for the Australian dollar, US dollar, is at a 7430. It's not far away from the long-term equilibrium price level. This is the turquoise line here at 7430. This level of 7430, we must watch it up to the end of February 2070 because the short-term equilibrium price level will remain in place for 2 to 3 weeks until a new short-term equilibrium price level is established. So remember 7430 if you are day trader and swing trader. As you can see on the weekly chart, the price breaks above, okay, the declining channel. In my view, I'll prefer it to run away from it before pulling back, okay, to retest either the top of the channel or another key level. So first long-term equilibrium price level, do not forget it, 7468. Current short-term equilibrium price level, 7430. Apart from those key level, we have another key level here, the pink line here, 7549. Another one, okay, we talked about this one already, 7480, very important. And another one, 8044, 8311, 8419. All right, so it's looking bullish for the Australian dollar so far, but it does not mean that we just buy anywhere, anyhow. The price above the long-term equilibrium price level, so we should say priority to bullish signal above that level. But if you ignore, this is where people get into trouble, if you ignore what I was telling to you at the beginning, the current market pattern, which will determine the appropriate trading strategy, you will quickly make a trading mistake because we are above the long-term equilibrium price level, but we are also approaching, okay, the top of the consolidation. How do you trade the consolidation? All right, very, very important. All right, if you have any question or suggestion, all right, put in the comment section, and in due course, I will be recording another video to answer your specific question. All right. On the daily chart, the same consolidation is still in place, as you can see, still in place. All right, so nothing to add to this anymore. Remember the key levels, trade around the key level, around key trend lines. Okay, look for candlestick pattern in the vicinity of those key level. Look for chart pattern around those key level. Look for breaks above, retested around. Look for break below, retested around those key levels. All right, draw your channel. Use pitchfork tool. All right, and the most important thing to achieve consistent winning trade is to check, to trade accordingly to the, all right, the current market pattern, especially on the monthly chart. Okay, all right, it makes sense. All right, this is the end of this tutorial about Australian dollar trader shares his FS trading analysis in 2017. Until next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.